Okay, now ready to look at 9.4. And now we're going to look at our cash payments journal and some different ways that we're going to pay cash out and use this journal. Now, we did use this journal when we did payroll, but we only used the general and the cash credit. We didn't use the accounts payable debit or the purchase discount columns, but we will now. Okay, so we're adding those two columns into what we're looking at for the cash payments journal. Right? So again, anytime we pay cash, we write a check, money comes out of our checking account. We want to use this cash payments journal, this special journal. Okay, that talks a little bit here about trade discounts and cash discounts. Trade discounts really doesn't affect our accounting work. So there's a lot of different ways we can get some discounts, but this one doesn't affect how we change our payments. This actually happens before we get place the order or get the bill. Okay, so our cash discount is something that we're going to look at because that's where we're going to use this purchase discount column. Okay, and basically we'll record the percentage discount in here. We'll pay less cash, but we have to keep track of the correct accounts payable that we're paying, and so that's why we have to do the discount in a different column. First thing that we're going to do, though, before we get into discounts is just write a check for an expense. Okay, very simple. We've done this. We're going to pay our advertising expense, $600, general an expense debit, and then cash credit of $600. We're going to write a check for office supplies for $56.20. Okay, we're going to write a check for $56.20. Okay, their debit and our credit are there. That's pretty straightforward. Again, here we bought the supplies on cash. Now a cash payment for a purchase. So if we, again, purchase merchandise on account, it has to go in the purchases journal. Okay, but if we pay cash for merchandise that we're going to turn around and resell, we actually go physically to Costco and buy the big box of candy and we're going to turn around and resell it, right? We went and we bought the product that we're going to sell for cash, point of sale type of transaction, okay? Then because we're writing that check at that point, we're getting the merchandise and we're paying for it at the exact same time, then it's got to go in cash payments, okay? Now we do have the account title as purchases, so it'll end up in that purchases account in the ledger like it's supposed to. It just comes from the cash payments journal instead. And again, that's pretty simple. It doesn't matter who we bought it from, okay, because we're not have to owe them money. It could be a company that's not a part of our normal vendor list, but we don't really care who it is. Okay, just the fact that we purchase merchandise, and so we're going to use the purchase column there. Okay, now here's where we're going to look at the discount. We had previously made a purchase on account to Galley Electric, okay, and we got the invoice, and they told us that we were able to take a 2% discount if we paid within 10 days. Or if not, we had to pay the full amount within 30 days. Again, I showed you a little bit earlier the 2, 10, and 30, or net 30. And that's where the 2% discount within 10 days, or you pay the net, the entire amount, within 30 days. Okay? And so that's our discount period. If we pay within that discount period, we get to calculate our discount. So 2% of the amount that we owe is $12.80. All right, so we have to put the original amount that we owe here so that our accounts payable decreases by the full amount because we're paying it off. But we're not going to give them as much cash, and so the difference is the discount, and we're going to keep track of that in its own column, okay, in its own account. All right. So again, the $640 minus the $12.80 gives us the amount of cash that we're going to write. So the check amount is for the $627. This is what we owed, so that's what we're going to reduce our accounts payable by. And the difference between the two is the discount, the 2% discount that we got to take. Okay. Here, similar, except there's no discount. Either they didn't offer one or we didn't pay within the 10 days, whatever the case may be. It looks like this one, they didn't even offer it. So we are paying S&R Imports because we owe them money. We bought from them earlier, and we increased our accounts payable at that point, and now we're going to pay them. So our accounts payable is going to decrease with the debit, and of course our cash is going to decrease with a credit because we are writing a check to S&R Imports to pay that amount. Okay, and then the last cash transaction we're going to look at is a petty cash report. You don't have to go figure this out. They're going to give you this information. You've just got to journalize the check. Okay, now remember with petty cash, we have that box. We fill it with, we cut ourselves a check, we go to the bank, we get the cash, we come back to that box. If we use money out of that box, we have to fill out a little slip so that we know what the money was used for. In this case, it was used for advertising, supplies, and miscellaneous. At the end of the month, we count how much money we have in the box. We know how much we put in initially. We see if there's any difference. Okay? If it's a cash short, it acts like an expense. If it's a cash over, it acts like a revenue, I guess, like a sale, right? So because this is in parentheses, this is a cash over. And so you can see that it's actually a credit here. These are all expenses: advertising expense, supply store, miscellaneous expense. Well, this one is assets, right? But they're all debits. And then we take the 3 debits, subtracting the amount that we had over. I don't know how we ended up with 31 cents extra in our box, but we did. Somebody added some extra change from their pocket or something. And then doing the math, this is how much cash we have to actually write the next check for to replenish the petty cash box. Okay? And again, remember, this is replenishing. We had 2 different transactions, one for establishing petty cash, one for replenishing petty cash. Again, when we replenish petty cash, we don't use the word petty cash in here. Okay, so hopefully you're remembering all those little details as we go through. Okay, all right, so working together, we've got several different cash transactions. We're in October, we're on page 10. We are writing checks, so let's go through the transactions. So on that same page that we did the purchases journal, down at the bottom you've got the cash payments journal. Okay. And it tells us that we're on page 10 of the cash payments journal. We are in October. And our first transaction is October 2nd. And again, just remember, I'm pulling from here. Wrote a check to Built-in Communications for the telephone bill, $124, check 521. Okay? Telephone bill. What account? Remember, we have our chart of accounts. Flip back to our chart of accounts. Looking at our expenses, right? Telephone bill. It could be communications. I don't see communications. There's nothing about telephone. So I would say probably utilities expense, right? Remember, always come back to your chart of accounts and look if you need to. So a utilities expense. And again, this column, because it's cash payment, has the check number already there, so you don't have to put the C, but you do need to put what check number it was. So check number 521. An expense, general debit for 124, and we wrote a check for 124. Okay. Then on October 3rd, we wrote a check on account to Gray Manufacturing covering the purchase invoice number 532 for $16.40 less a 2% discount. Okay, so purchase invoice means that we bought this a while ago, okay, maybe last week, and now they're sending us a bill for $16.40. Okay, the purchase invoice was number 532. This check is going to be 522. So we may or may not need that information right there. But we are going to take this 2% discount. So we're going to have to calculate that. Okay? And we're paying this on account. So we are going to use Gray Manufacturing, and this is for the 3rd. Check number 522. And the amount, so again, this was on account, right? On account. So since that was on account, we want to use the accounts payable debit, not the general debit, because we've got to make sure that the accounts payable for Gray Manufacturing is decreased in our ledgers. So here for $16.40, the entire amount of the bill was $16.40, but we're going to take that discount. So let's figure out what the discount is. $16.40 times 2% is $32.80. So the $32.80 goes here, and then we subtract those two. $16.40 minus $32.80. This is the amount of the check, the amount of cash that we are actually paying. $1607.20. Okay, so really this minus this equals this. Okay, and this would be usually 2%, but just remember that that's the percent, the accounts payable times the percent. Let's put that over here to get the discount. It's not very clear. Okay. Maybe that'll help you remember where that's coming from. Okay? All right, so that's with the discount. Again, on account with discount. Right here. Next one for October 9th. Wrote a check to LPF Manufacturing for merchandise with the list price of $15.75. This has nothing to do with on account. Okay, so we're just paying cash for the merchandise. We don't really care who it's coming from. Okay, but we do care that it's a purchase. It needs to be recorded in the purchases journal. Okay, so that's how we're going to label this one. And this is for the 9th. It's going to be a purchase. We're going to purchases. Check number 523. For $15.75. Okay. Again, it's not on account. Okay, it has nothing to do with accounts payable. We're just walking into this place and buying our merchandise. And then $15.75 with a check, cash, right? Okay, so this is not on account. Okay, this is on account with the discount. This is not on account. Right here. Okay, the next one. On the 12th, wrote a check to Village Supply for office supplies. We're just going in, just like we would walk into Office Depot and buy supplies. So we're just writing a check for it. Again, we don't care who we're buying it from, but we do care that our account is correctly recorded. Again, this was on the 12th. And we are buying supplies for the office. Okay, and again, looking at our chart of accounts. We have supplies office and we have supplies store. So we need to make sure that we label those correctly. Okay, and it does tell us that it's specifically for the office. So supplies hyphen office is what we need to use to record that. Okay, and that's check number 524 for $64 and $64 cash credit. Increasing our assets, decreasing our cash. All right, now on the 16th, wrote a check on account to Weston Supply covering the purchase invoice. No cash discount was offered. So because it says on account and purchase invoice, we know that that's one of our vendors. They have their own account, so we'll use their name, and we don't have to worry about the discount calculation. All right, so on the 16th, Westland Supplies. Check number 525 for $426. Now, again,